Hey, good morning, guys. As you can tell, I'm not Rob. Good morning. Welcome to the market mornings. And want to say, hey, either that or I had a really good makeover overnight, right? Now, Rob was a little under the weather, so he asked me to fill in for him real quick. So I am here for the next 30 minutes or so. We're going to have a little fun. Let me know if you can hear me okay. Give me a one or a yes or whatever it takes. Let me know that my audio is good. Awesome. Good morning. Good. Good. Hey, I see some familiar names there. How you doing, Trip? Awesome. Well, if you're not familiar with me, I created Patterns in a Flash, which is a tool you've probably seen on Wealth Builders that is all about patterns. That's essentially how I trade. Is I look for specific patterns. So we'll be looking at some of that this morning. As you can see, there's one on the screen there, but the some economic data is out. So the initial jobless claims and stuff came up. I don't know what they came out yet. I haven't seen that data yet, but we could look at the futures, take a quick peek at what they're doing. And there's SPX. I don't know where the data is. What are the trying to see what it came out as, what the actual numbers came out as. But looking at the chart, you can see it's ticking down. That's a 5-minute chart of the S&P futures. It appears that the market is not liking the jobless claims data. Trying to see, honestly, I don't have it. I usually just look at the market reaction. So obviously it looks like they came in worse than expected, but see what the, so that's the SPX. Where is the, and forgive me, on a different machine. You can see I have my trading machine behind me. So I have one machine that is dedicated to trading, and the other one that is this is one that I use for other stuff, emails, and so I'm a little I'm used to the one behind me, so I've got all this main stuff on there. That was the NASDAQ futures, Dow futures, trailing off a little bit. So, but things can change, right? We still have an hour till they open, and we'll see how things play out longer term. I know Rob normally covers what trades he did yesterday, but obviously I'm not Rob. So do y'all have any trades that you have done that you want to look at, or any trades that you want to look at? We'll look at, I've got a whole list. You can see my list on this left side there. I got about 15 or 20 that I'll be watching today to see if there's any good entry points. We'll go through those here in a minute. So, okay, thank you, Trip. Yeah, no, seems kind of crazy. I basically look at the market reactions to the data and stuff. So I don't worry too much, especially when we're an hour out from the market still. It usually plays out long before the market does. So, but I appreciate you giving me the info. So unemployment claims came in at 185. Forecast was 172. Tiny Tesla scalp. So let me take the futures down. So you picked a little piece off. I'm assuming a little bullish piece on Tesla, Alan. Is that right? And they come out with earnings, and Alcoa kicked off earnings yesterday. So it is now officially earnings season. So we got to be careful of that. That's one thing that is always challenging. It's frustrating to find a good pattern, a good looking trade, and then realize that earnings isn't a week. So Square short. So you pulled 36% out of Square, John? I'm assuming that's what you mean by that. So awesome. Yeah, it whips up. Whipsaw's been a lot, right? There's a ton of whipsawing lately. It's a little frustrating, but it is what it is. We got to learn to adapt to it, right? So BLK. BlackRock. Bullish or bearish? Just curious. This one I haven't seen for a while, but oh, I got you, John. Yeah. Condors. Yeah, I look specifically for just patterns. What'd you see on BLK, Don? I'm just curious. And I'm also curious if you're bullish or bearish on this. Yeah, and they just came out with earnings too. Did they come out yesterday, or did they come out last night or this morning, I wonder? There's my list. How are they doing pre-market? Is there still a trade on BlackRock? Let's see, we have pre-market. Oh, it looks like they came out before. Is that right? They're basically flat pre-market. Not doing much of anything right now. BCS. Barclays. That's a gappy stock. I'm not a big fan of gappy stocks. I've got Baidu on my list, but I don't. I'm not a big fan of the ones that gap a whole bunch overnight. But sometimes they can be spectacular. Whew, what to think of this thing? Look at the long-term picture. I always go back and look at the entire history of a stock. If you're all using the mega charts, it's real simple, right? You hit a few keys and there's the entire history of this thing, just to see historically what we've got. Because have you ever gotten into a trade and then got stopped out and then go back and look at the history and realize that there was a major support from 5 years ago or 10 years ago that you didn't see on the chart? So I learned that a long time ago. So it's always a quick look to see if there's anything major that we're missing. Yeah, I see that. Oh, I just noticed this is only a $7 stock. Is this something you're looking at going long, buying the stock, or if that's the case, well, maybe. If the market continues lower, it's got potential to go down to a couple bucks or $4, which is pretty big. So yeah, this is one. Obviously, we're clearly in a downtrend, and you can see the volumes accelerated here in the last couple of weeks. If that's something you're looking to go along, I mean, personally, I would stay clear of it just because of the trend, and it looks like we accelerated some momentum to the downside. But that's me. Is that ORLY? Do you see any patterns in Orly? I do. Ooh, I like the looks of that. Oh, this is O'Reilly. Has that always been their ticker symbol? I haven't seen that for a while. This is a pretty good-looking symmetrical triangle, if y'all didn't see that. Which is, holy cow, they're $724. That's crazy. An auto parts company. But it makes sense. You know, usually, and this is one of the beautiful things of when you look at the big picture of things, is when the economy is getting weaker, what companies do well, especially if you only trade the upside. I love trading the downside. So when the market's dropping, I'm happy. But at the same time, if there's bullish opportunities like this, I'll jump on them. And some people don't like trading the downside, so they're only looking for bullish stocks. And you've got the makeup stocks, alcohol, tobacco. I know Moe's popped up on the radar a few times for me. Altria, right? Philip Morris, because they make cigarettes. And interestingly enough, I heard probably 6 months ago that for the first time in like 30 years, I think it was, the data was showing that the number of smokers have actually gone up. I don't know how they collect that data. I don't know if they poll people and ask them if they're smokers or what they do. I'm not. I did for about 2 weeks when I was, I think, 19 or 20. And that was basically it for me. No, I can't stand it. I get anywhere near smoking. But yeah, it was interesting to hear that for the first time in, I think it was three or four decades, that the actual numbers of smokers have gone up. So, which would make sense in a lot of ways. When you've got a pandemic and all the economic chaos that we've had, then people are drinking more, they're smoking more. If you can't go to Nordstrom or Saks Fifth Avenue or take your vacation, right? If you're a lady, you want to look nice, so you spend money on makeup and just the cheap things that make you feel better, right? It's just human nature. It's just what it is. So let's see what kind of potential we have on O'Reilly. And then if we can, $72, that's about 10%. So yeah, there's potential for this thing to run up to about 775. I think that's an all-time high. Yeah, we're at all-time highs here. So I like the looks of this, the pattern. The question now becomes, is it too far away from an entry point? Is the risk reward feasible or not? So, and that's really a question only you can answer. If I was doing this, I'd put a stop right there. I'd put a target just short of that. And then I would just plug it into the calculator. If y'all don't mind, just a minute, we'll go ahead and do this. That way, if you haven't seen my materials or seen anything that I do or how I trade, you'll see exactly how I do it. This is effectively what I do. I look for patterns. And when I find one, you draw the pattern and analyze it. In this case, with the symmetrical triangle, we can get what's considered a measured move, which is the 72.27, right? You measure what's called the base there. And then with that, wherever it's at, I put a stop in. So if this thing rolled back down and dropped below 700, I wouldn't be bullish anymore. Gets up to about 771. That would be the target. And I would most likely be scaling out of this thing as it ran up. Stop in there, put the target in there. So from a risk reward perspective, using a 3-to-1 risk reward with that stop and that target, my entry point is 716.81. So I got $18 of risk and $54 of upside. So let me change this and put in the entry point. So there's where I would look at entering to get a favorable risk reward ratio. 716.81. It's a little bit above that. So then the question becomes, do you fudge it a little bit by, 8 points? And of course, we'll have to see what happens today. I would personally wait for this. If you really felt, and this is, I run into this quite a bit, where you're worried you're going to miss it, I would possibly enter here, but I would do it with a lot smaller position. If you're going to pick up, say, 10 contracts, I might do 2 or 3, since it's outside the risk reward. That way your risk is reduced. But I would wait for this thing to come back to 700 and bounce at the old resistance level. And if I miss a trade, I miss a trade. I don't worry about it. I would rather wait for it to come down here and then pick some up as it's rallying back to the upside, if it does, than to take it here with higher risk and take a bigger hit if it does roll back. So, but it looks good. That is essentially, again, if you don't know me, that's essentially how I trade. I look for a pattern like this, draw it, analyze it, put it in a trading plan, and now I just wait. Wait for an entry point. What was, I know I saw another one on there. Okay, Orly. Nice. $1 on a $5 credit spread. That's always nice. Yeah, volume's been light on a lot of stuff. That's one reason obviously we had a little bit of a bounce yesterday, right? But the volume on a lot of things was was very light. OVV, energy oil, yeah. There's the entire history of it. Next spot of headwind is about there. Just throwing some lines on here to see where, and I'm just looking for, I just look for major support resistance levels on the long term. I mean, this is a monthly chart, right? So we're looking at almost 20 years worth of data here. There's definitely some potential there. The only thing I don't like about this, there's no clear-cut patterns that I can see. But if it runs above 55, there's a pretty solid likelihood it's going to run up to about 65. So the question then becomes, how do you structure a trading plan that's favorable from a risk-reward standpoint? Because I don't see, like I said, I don't see any clear-cut really entry points here. If we had a little flag type of pattern, which there's a little bit, but that's kind of stretching it. So if you consider this the resistance, if we break above the resistance, there's probably a decent likelihood we're going up to there, about 62. So if I was going to trade this, which if there's some kind of signal that gave me that let me know that it was a good spot, I'd put a stop right there, a target there about 63.50. For time's sake, I'm not going to do all the other stuff. Just going to punch in the numbers. 645. Let me see if I can just get it close enough. So that'd be my trading plan. If you're bullish on it, you really think this thing's gonna go further north? Does that make sense? Clear as mud, right? Paul, what's my overall forecast on the market? Bearish. And here's why. And it has to a certain degree been negated, but you see the head and shoulders. And this is head and shoulders is my favorite reversal pattern by far. But the SPX, especially the Dow, is also, the Dow's a little bit cleaner actually. And actually this has got, you can see we've got lower highs. Let me zoom in a bunch here. So we've got the head and shoulder, right? The left shoulder here, the head, the right shoulder, which it's always better when the right shoulder is lower than the left shoulder. That's obviously more bearish sign. And then here on the Dow, we've got an even lower high. So we're still in the intermediate term, in the, 3 to 6 months time frame, we are bearish. We got lower highs, lower lows. And we've got the head and shoulders there. And there's the SPX. It's very similar, except that this one, we did make a newer high. So a little more neutral on the SPX. But overall, I'm bearish, and here's why. You see that head and shoulders right there? Left shoulder, head, right shoulder. Look down at the date. That's 2007. That head and shoulders showed up on the S&P, and I believe the Dow did as well. I don't know if this will stay here. Let's find out. I think it does. Yeah, there's another one on the, you can see this on the Dow. We've got a similar pattern, left shoulder, head, right shoulder. It's almost identical on the Dow. You look at the behavior, and we've got a right shoulder. So look at that picture right there. And there's current. Looks almost the same, doesn't it? So that is the main reason that I am bearish in the long term. And not only that, but you look at the economic data, you look at the big picture. At least in my opinion, there's this perfect storm that's been brewing. And there's a lot of things that if one little piece crumbles, then the whole house of cards is probably going to crumble, in my opinion. And I think there's so many headwinds. It's just hard to, I think it's hard to overcome a lot of the stuff that's happened. And I don't know that the Fed could even do a whole lot. So I think we're in for some really tough economic times. So, and I'm not jumping up and down and cheering. But the beauty as traders, knowing, especially if you know how to trade both sides, is that who cares, right? It doesn't matter. We can't control what the overall economy does. We can't control what the stock market does. We just have to respond to it. And if you learn to trade the downside and it is dropping, then maybe the overall economy is getting worse, but your personal economy, that's the ultimate question. How's your personal economy doing? Where are you at? As long as your account is growing and your account is moving in a bullish fashion, in an uptrend, you can't do anything about the overall market, right? So DXCM, let's go look at some more stocks real quick. Are we back to today? Yes, we are. DXCM, looking for a bullish entry. If it bounces, it's definitely got a little bit of support there. Pretty decent, actually. I mean, you got that there. It's not massive, but it's definitely there. See what it looks like longer term. Healthcare. And if you haven't noticed too, there's a pretty big shift into, that's another one. Healthcare, drug companies, obviously oil and commodities. Things have been very bullish with that. Y'all see that right there? There's another Head and Shoulders. And this is this is gonna be crazy. Watch this. I don't know if I've ever looked at Dex.com. Oh, Dexcom. This is why I love patterns. Watch this. I'm just eyeballing this. I'm thinking it worked, but with the Head and Shoulders, most of them, and you saw it with the symmetrical triangle, most of them have what we call a measured move, and it tells us about what to expect. Also considered an expected move. So if you measure from the neckline right here to the top of the head, that's about what we expect it to move if it breaks. That's it. That is crazy. I mean, I don't know if I've ever looked at this stock. I've probably seen it, but I haven't ever analyzed it. Obviously, there's no lines on it. But Head and Shoulders pops up. Expected moves about 125, 130 bucks, and it breaks the neckline. And how far does it go? Boom. So there is why I love patterns. And honestly, even after 22 years of doing this, it still blows my mind. I mean, I look at this and it's just mind-boggling how often these things play out like this. It's just crazy. But yeah, on a short-term basis, it's obviously bullish. We got a nice little, actually, there's a little inverted Head and Shoulders. You could also consider it a triple bottom, depending on what you want to look at. But the ultimate beauty is that it doesn't matter which one it is. We got a bullish move out of it. So there's the interesting part is we're back up at the neckline from the Head and Shoulders from the bearish move. So short-term, maybe run a little bullish. I'd maybe look for another pop-up here to about 530. If it breaks down below this level of, what's that, 490? I'd be bearish again. But earnings is coming up. Looks like the 28th. So that's only 2 weeks away. So we gotta be cautious of those, obviously. So sorry, Darla, I missed that. You said I want to go long. Was that on O'Reilly? Yeah, thanks, Al. That's what I was thinking too. You just don't want me to try to sing it. So I gotta have it. I'm on the West Coast, so it's not even 6 o'clock yet, which is no big deal. I'm usually up anyway. Oh, thank you, Sean. There is a link there in the if you want to get a trial of patterns in a flash, then that's there. You got a 2-week trial, like almost everything we have. So spiders, somebody's wanting spiders. Who was that? Oh, Evelyn, spiders. This is going to look just like the SPX, right? I mean, it mimics the SPX. So obviously long-term bearish on it with the Head and Shoulders showing up there, even though it has to a certain degree been negated, but it's just, the pattern's still there, still broke the neckline, and a lot of other indications are bearish. So, but on a little more short-term basis, I wouldn't be surprised to see a pop up here to the 455 area. We'll see where we're looking right now. I don't know what futures are looking like. Kind of curious. Down. Yeah, they're continuing to drop off. So obviously the market wasn't excited about the unemployment, but who knows how far it'll drop in the next 30, 35 minutes. So hard to say. Like whoever said that, a lot of whipsaws. It's a lot of craziness right now. Very volatile. Things are crazy. So in and out quickly. Typically as fast as I possibly can, preferably intraday. bullish hammer reversal on the SPX monthly. Here, you know, we can just look at this. Well, there's a monthly chart. You look at a monthly chart, the head and shoulders is a lot clearer. So we need candles. We're talking about hammers. I'm not seeing a hammer, not from a technical perspective. If we're looking at this candle right here, which is what March's candle, not technically a hammer. The body's a little too big, but it's got a similar type of. I mean, you've got the long shadow to the downside. But interesting. I don't know if I've ever looked at it like this from a monthly perspective with candles. Huh. I don't see a whole lot that's exciting though. I still see that head and shoulders there. Oh, weekly? Okay. Okay, yeah, there we go. That's better. Now we got a hammer pattern as of today. Of course, we've got still today to finish off the week. So if the market drops off, 4, 5, 6, 7 points, then it's pretty much negated. If it's pretty flat today, then yeah, we've got a hammer on a weekly chart, which could actually, be a signal that we'll run back up again. But I wouldn't be bullish unless it got back above 453. Unless we got back above this previous high 3 weeks ago, which also is the intermittent low here from the peaks, and also the high here. So I would not get bullish on the overall market, the spiders, SPX, really anything related to the SPX, unless the market closes above this 453. Only way I would be bullish there. Good, Paul. That's the reason I do this. It's the only reason I do this. I have to start looking for that. This is what's hard. I can't keep up. I love that you guys make comments. It's interactive, which is nice. But like, that's insane. Start looking at what? What time? Help me out, Darla. What time frame did it take to break down? Are you still talking about Orly? I'm not sure if that's what you're referring to. Help clarify it for me if you would. We just got a few minutes left. A head and shoulders for the upside? I'm not sure what you mean by that, Darlo. So help me out. Because the head and shoulders is a bearish reversal pattern. So I'm not sure when you say on the upside. Looking for expected move based on the head and the neckline. You know about using the neckline as support? That's what I'm trying to, like I said, I'm trying to understand exactly what you're asking. I want to give you an accurate answer. Yeah, I mean, the neckline is support. And that's one reason that if you are trading the head and shoulders, you want to make sure it breaks first, right? You want to wait for it to confirm and break below the neckline. I've done that many times where I got ahead of it and you get in the right, you go, there's a right shoulder. I'm going to get in right here before it breaks. And then all of a sudden it's using the neckline as support. And then you're getting stopped out. I should have waited for it to break. I've learned to be more patient because of things like that. So looks like an inverted. Oh, I got you. I was wondering if you were talking about that. I see what you see. I'm assuming this is what you're talking about. So left shoulder here, head, right shoulder. Yeah. I mean, the patterns there, is it technically accurate? No, because an inverted head and shoulders would come at the bottom of a downtrend. And typically head and shoulders are bigger patterns. So it would have to be a longer. I mean, this is just a downward move. So again, it's, it depends on how many nuances you want to parse out, but it's, and I don't worry too much about it, but yeah, if it gets back above there, I mean, if it goes back above that level, then yeah, we'd probably approach the new highs, but I'm assuming that's what you're looking at. That's what you're seeing. Couple more real quick, and then we got to wrap up, I think. Looking at NVIDIA, looking at calls on NVIDIA. I don't mind the looks of that. We've definitely got a little bit of a base we built here. And it's sold off, obviously, significantly. So a bounce here would be expected. The odds are, and that's one way I always think, is the odds are much higher of this thing going north from here than it is to continue to fall. Because stocks just don't fall off a cliff like this forever. There's another beautiful, look at that evening star up there. Let me look at, I thought we looked at square real quick, did we not? This one I actually like the looks of for a bullish trade. If the market continues to run up, if it does run up, we got a nice little kind of a double bottom. There's a little bit. This would be not really an inverted head and shoulders. It's definitely not beautiful, but you could call it that. That would be more, Darla, just for clarity, this is more, after a downtrend like this is where I'd look more for an inverted head and shoulders. Again, it's all technicalities, right? It doesn't matter where the pattern shows up. I just treat it a little differently. If it's not textbook, I just take less risk, right? All right, one more and then we're wrapping. Apple. This has been pretty good. This little double top up here was beautiful. And was looking for it to possibly drop off here, but I got out of this the other day. I'd gotten in when it hit this line. I got in, and then I think I remember I stopped out here, and then it ran up, and the double top happened. I got in somewhere. I don't remember exactly where it was, but I did okay on it. I didn't crush it, but did okay with it. And then, of course, it popped yesterday. And there's what I don't remember who said that about volume, but you notice the volume yesterday was super light. You know, it did 58 million shares where the average is 85. So, and lately it's been doing close to 100 million. So it did, you know, the volume's off by 40% or so on Apple. And a lot of stocks are like that. So definitely not a bullish sign to have weak volume on the upside when things move higher. So if you're trading bullish, my opinion is keep it short as possible, and keep your stops tight. Because the indications are, at least especially from volume, is that we're probably going to roll over at some point. The question is how far, if we do rally, how far do we rally? And when do we roll over, and how violent is the rollover? So, and how quickly does it drop off? So, all right. I think that is all my time for the day. So appreciate y'all coming and hanging out and having some fun. And hopefully we'll get to do this again, maybe. I had fun. So, all right. Y'all take care. Have a great day. Have a great Easter. God bless. Bye-bye.